just want to say thank you to everyone who's been watching my videos so far. It's still very early into the channel, but I really appreciate the 10 or 11 subscribers I have, and I think I'm at like close to 100 views so far. So really encouraging. I figured, you know what, Saturday, there's no trading today unless you're trading crypto. You don't need to watch these videos. I'm very jealous of you crypto traders. But, anyways, wanted to take this opportunity to just continue backtesting my strategy. And I think I'm going to do this pretty consistently going forward, especially on the weekends, because I do this anyways. And I figured, you know what? Why not? Why not backtest um, if I'm not going to be doing any live trading reviews? So let's go ahead and just click the continue backtesting and just go to this chart. So you may or may not be familiar with my strategy already, and that is totally fine. Basically, my first video on the channel is actually me going over the strategy in depth um, and outlining it very quickly. I will be making videos that explain each of the concepts individually, especially for those of you that are new to trading and are needing a little bit more guidance. I totally understand uh, needing some more educational stuff, but it will be coming out on the channel. I will be creating those videos. I mean, there's plenty of videos on YouTube already that explain these concepts, but everybody has a little bit of a different take from what I've seen on IC concepts, whether it's value gaps, whether it's liquidity, whether it's even things to do with Fibonacci levels. I have something that works for me, and I don't tend to listen to any more educational videos that explain those concepts because ultimately it is working for me. So whatever works for you, by all means. But if you're not profitable, or you're not even break even yet, then keep learning, keep back testing, keep forward testing, but don't hop strategies. Whatever you do, just don't hop strategies. If you like certain concepts and you like whether it's supply and demand, ICT, maybe it's something to do with bookmap, it doesn't matter. Whatever you prefer, go and have at her. Go dive deep into those concepts and find people that can explain those concepts for free on YouTube, because you don't need to pay for courses. Um, okay, so just a little bit of an explanation here. I don't trade FOMC days. I don't trade any days that Powell is speaking, the Fed of the chair of the Federal Reserve. I don't trade any days where the president is speaking, Trump speaking. So those are the three main days that I avoid. I do trade every day of the week, though, Monday through Friday, regardless of what other news events are taking place. I'll trade days with CPI. I'll trade days with NFP. I'll even trade no news Mondays because just based on my data, I actually see pretty good results from trading no news Mondays, even though um, you know some strategies won't work very well on Mondays. So I'm going to say something here that's a little controversial because my strategy, my strategy is basically allows you to. So yes, it definitely helps to understand external and internal liquidity and what that actually means. That will give you an idea of how the markets move and just allow you to kind of read where things are going and what the trend is actually what trend we're actually in, or what market we're actually in. Are we in a trending market? Are we in a consolidating or in a ranging market? And you know when we see stuff like seek and destroy models, which I won't explain in this video, but it's basically when price goes and takes out a high, followed by taking out a low, followed by taking out that high again. Basically, just one big V shape. Those kinds of days, unless you've back tested them, unless you've taken the time to learn how to trade those days, don't trade them. Okay? There's no reason. In trading, less is more. So focus on the days that you feel comfortable trading. If that means not trading on days with CPI or NFP. Go back test it and figure that out for yourself before you make that assumption. But that's totally fine. Everybody's got a little bit of a different approach. And what it comes down to is if you don't have the confidence in your system to follow it to a T every single day, chances are you haven't collected enough data, created enough conviction in your system to keep following the plan. That's why you're strategy hopping in the first place. Okay. So these candles right here are the 4-hour candles. I set up where it shows the last 4 candles when I look at the higher time frames. Something that's interesting about this indicator, which is this 3 indicator here, this indicator settings, feel free to stop if you want, but the indicator is built into FX Replay. One of the things that I know about this indicator is if you're not looking, like if your screen isn't showing the last, 4-hour, like in this case, I have 4-hour candles, right? So if I don't actually see price action that goes back to this 4-hour candle, the last one here, it's not going to be that 4-hour candle. So if, for example, zoom in, go to 5 minutes or the 1 minute even. Okay, so see how I 1 minute and then it only showed me 2 4-hour candles? That's because I need to scroll back and then it shows me all. So just keep that in mind when you're using this indicator. If you do, something that I was racking my brain about for a while, trying to understand why it was glitching out every time I zoom in. But anyways, that's all right. So I like to look at the last 4-hour candles, and what I do is I'll come to the charts at 7:45 MST or what is 9:45 MST. Let's see what this is. Okay, so this is actually FOMC day. So I'm not going to be trading this day because FOMC is on this day. So I'm going to go to next day open. All right, so you can see that this is market open right here at 7:30. We are looking very bearish on the 4 time frames. And what I like to do is I only trade in line with the 4-hour candle that is open. Okay, so what does that mean? That means that if I was to take a trade right now, it would have to be a short because this currently open 4-hour candle is bearish. All right. So let me go ahead and just zoom over to the 8 a.m. 5-minute here. Okay, let me just zoom over to the 8 a.m. candle. 1, 2, boom. Okay, there you go. So you can see the new 4-hour candle has opened. And what I'm looking for is I'm going to the 15-minute time frame. And I'm waiting for price to tap into a 15-minute fair value gap. All right. So we have one right here. Now, this is also very important. So even though the 4-hour candle is currently open bearish, on the higher time frames, just looking at this leg right here, we're bullish. We are bullish. We had a very bullish move in the last 2 days. Holy moly, look at that. Very bullish. Okay. So what I'm going to anticipate is I'm going to anticipate that we come into this 15-minute fair value gap, we manipulate lower to then flip this 4-hour candle bullish to then go higher and to take out all of the liquidity that's resting up here because this is absolutely insane amount of accumulation. So you can kind of like if you're familiar with the AMD model, which is accumulation, manipulation, distribution. This is your accumulation, right? So I'll just put range for now. All right, so this is probably our manipulation. Let's put a blue box for that. So there's our manipulation. Hopefully we get manipulated into this fair value gap. And how do we determine where we're going to go long? Well, I like to use the Fibonacci tool. So go from that gray candle there up to there. And what do we have? We have the 50 right here, as well as the 236 that it's currently at. Let me go to the 5-minute and see if I find anything. So 5-minute candle, look at this. Let's just take from here to that leg has already been, whoops, that leg has already been tapped to the 50, but we didn't get the 27 extension. All right, so let me just mark that up and pull this over a little bit. This is a little bit of an awkward trading day, but you can see that we're actually at the 50 level. There's 705 sitting down here. We still have that 15 minute to tap into. And as far as I can tell, there's no news. This is a Thursday. So let me hop down to the 1 minute now that I've got my 15-minute fair value gap marked up. I've got my 5-minute fib marked up. And what am I looking for? I'm looking for price to come down to this 15-minute fair value gap. All right, so there we go. We've got a bit of not quite a change in the state, but let's keep waiting. I have to wait for it to tap the 705. Once we break that 50 level, I need to see it come down to that 705. So let's just wait. A little bit more patient. It's okay if it goes and runs away on us, that's fine. I don't care. I'm not here to catch. Let's do this. All right, where are we at here? We're at 10:06. So this is the last hour. All right, let me go ahead and switch to the 15-minute here. This 15-minute was invalidated. We didn't tap into there. 10:45. This looks like a no trading day for me, just based on what I'm seeing here. Let me just go to the 1 minute again. Yeah, I don't know why we just jumped to the next at 4 p.m., but 11 to 4 p.m. It might have been a bank holiday. Let me just pull up my Forex calendar. Okay, let's go to, this is July 4th, 2024. So let me just open up my July 4th, 2024. Wow, look at that. July 4th. Oh man, I think that's what is that called in the States? I'm Canadian, so it didn't even click when I said July 4th, but yeah, for sure it's a bank holiday. It's Independence Day. Yep. Okay, that makes sense why price action is kind of gross. So yeah, I should have mentioned bank holidays are also days I do not trade. So bank holidays, days when presidents are speaking, when the Fed of or sorry, keep saying the Fed, when the chair of the Federal Reserve is speaking, and FOMC. I don't trade those days. I actually don't even like to trade days leading up to FOMC because FOMC happens on Wednesdays typically, and usually the days before FOMC are absolute trash. Not entirely sure why. It's just just an observation I've made from trading live and also backtesting. So let's go ahead and remove these drawings. And this is why it's funny because I recognize that price was not giving me an entry, and it's a bank holiday. I didn't even know it was a bank holiday, so I just know inherently that this price action, there's something about it that was not sitting right with me. Let me go ahead and go next day open. All right, let's go to 15-minute time frame here. All right, so this dotted line is the low, or this is the lowest point on that 4-hour candle. This is where price opened at, and this is where price is currently at, and this is the high of this currently open 4-hour candle, in case you're wondering what this box is. All right, so we're now sitting at market open again on Friday, July 5th. This has NFP, which is already passed, which is this big spike right here. This was NFP. Let me go ahead and just click on 7:45. All right, so let me jump down to the 1 minute and just zoom over to 8 a.m. 1, 2, 3, 4. Boom. Okay, so we got a new candle. Now this is really I love days like this because this is very obvious to me that we need to look for longs, right? Unless this candle for some reason manipulates these highs, which I think we are at all-time highs. Yeah, I think we are at all-time highs. I don't like to fade all-time highs. When I say fade, I just mean take the opposite position of and trade against all-time highs. But there are instances where we could manipulate the previous 4 hours highs and then flip to then go take out some internal sell side or something like that. Okay. So let's go ahead and just mark up our 15-minute fair value gaps because, again, that's what I'm looking at. And in situations like this, what I have to wait for is I have to wait for 15-minute gaps, new 15-minute gaps to be created, which requires my patience, right? Because this right now is not a valid 15-minute fair value gap. Why is it not a valid 15-minute fair value gap? Well, it's very simple. This candle's still open, so it could flip and disrespect this area, which then removes this as a fair value gap. Like if there's any kind of wick here, that's not a fair value gap, right? So I gotta wait. I gotta wait 14 minutes to see if this has a new fair value gap. All right, there we go. See, now there's no fair value gap. Deleting that. All right, 6 more minutes. 1, 2, 3, 4, 5, 6. All right, let's just wait for another candle. So you might have to wait a little bit, and that's okay. This is part of the process. All right, so now we have to wait to see if there's this fair value gap holds. You just put that. Okay. Okay, 7 more minutes. All right, so that candle just closed right there, and this is a valid fair value gap. So let's go down to the 5-minute and look at the Fibonacci. Is this leg to that leg? Okay. Wow, what a coincidence. Our 50 level is sitting in the middle of that 15-minute fair value gap. Let me drop down to the 1 minute. All right, so let's go 1 minute. All right, tap into that 15-minute fair value gap and equilibrium simultaneously. And we get a nice rejection wick. The only thing I don't like about this so far is there's no 1 minute fair value gaps that we could potentially inverse. We have to wait for a change in the state for this to be valid. Let me just zoom in on this so I'm not missing anything here. Oh, actually, we do have this one, which we just inversed. Okay, so this is valid. This is an inverse fair value gap. We are rejecting off of the 50 level. All right, so I have to put my stop down here. It's actually not that big of a stop. It's 16 points. It might look big, but it's not. All right, then I'm targeting these highs for a 1 to 1.6. All right, I'm going to go ahead and click order, save and journal, so you can still see my giant window that just opened up. And what I'm going to do is I'm going to do a before screenshot. I'm going to go ahead and put my tags in here, 15-minute fair value gap. This is July 5th. We had news today. There's a clear draw. So 50% level retest. And we're in line with the 4-hour. I'd say I have like a 95% confidence in this. Only issue I see is price not giving us CISD and internal structure. Structure still appears bearish. And what I mean by that is to save. Oh, all right, I have to redo that. All right, so let's just close that and we just go back up. Okay, and then just go one candle again and then go to order. Okay. Sometimes if you do that, you have to delete the risk reward tool. Plug it in here. Just make sure it's 1 to 6, like it was. Okay. And order, won't be like that. Order. Oh my goodness, it's gonna make me do this. All right, let's try this again. Sometimes if you cancel your order but you don't delete the risk reward tool, it doesn't let you re-enter with. There we go. Sometimes you do some clicking and mess around with it. So this looks good. the market execution, save and journal. I'm just going to click the before and just go ahead and lay this out. So I'm going to drag this over to my other monitor. All right. So let's go ahead one candle at a time. All right. So see, this is what I'm talking about is when you don't have this like clear internal structure, like this right here is a lower high, lower low, lower high. We can anticipate a lower low. Now I do have criteria for reentry, but I don't like to reenter. Okay, well that worked out. So looked a little sketchy there for a minute, but because we followed our rules, and we stuck to our stop loss placement rules, we got our entry criteria. We didn't hesitate to enter with the market execution. Now I could have had my entry sitting at the top of this inverse fair value gap for a better risk to reward. But one of the things that will happen sometimes is you will have this candle print, give you that inverse fair value gap, and then it'll just take off and rocket. And this might actually go all the way to the 27 extension because this is all-time highs. Look at that, all the way to the 27 extension. So what I could have done is I could have entered here and then just targeted that 27 extension for an even better risk to reward, and it would have played out just fine. Now my rules don't dictate that that's how I trade because logically, price at the very least is going to go seek out buy side external liquidity and then potentially reverse if it's going to reverse. But considering what's happening on the higher time frame, we've got we're at all time highs. Price is in line with that 4-hour candle. We got all our entry criteria. We're rejecting out of the 50 level and a 15-minute higher time frame fair value gap. Very beautiful textbook trade. Can't really complain about not, you know, oh, I didn't need to, accidentally took a screenshot of that. Okay, I'll take a screenshot of that. Cool. So I'm just going to put the tags in here. Again, clear drawn liquidity. This wasn't a V-shaped recovery. 50% level retest. And I think that's it. In line with the 4-hour, and we're good. I'm just going to make a note here. Only thing I could have improved was setting a buy limit at the top of the IF 1 minute IFVG and targeting the 27 extension since we are making all-time highs. Boom. All right, save that so you can see there's my journaling tool. Let me just minimize this. All right, so then I go remove drawings and I go to the next day open, which is going to be on Monday. Okay, Monday, July 8th. There's no news today. Okay, so let's go to the 15-minute time frame. I'm going to adjust this indicator because I don't want it sitting all the way to the right. Let's do offset as like 50. There we go. Okay, let's go ahead and play this. All right. So I got to back up in a second. This is the 745. That's the 745 candle. So let's see here. So 15-minute. Okay, so what do we see here in terms of fair value gaps? Well, there's no fair value gaps in this leg, and the only fair value gap I see is down here, which has already been tapped into once. And there's nothing else. This is very choppy. Not gonna lie, this is very choppy. So yeah, we might have to be patient here because you might have to wait for a new fair value gap to be created. But we're still very bullish. And yeah, let's just go ahead and keep coming here. Hmm. Okay, so we did tap into that. The only problem with this is I don't want to go long at this point because our 4-hour candle is bearish, right? It's against my higher time frame candle. So even though there might be a trade there, I don't care. I really don't care. Mondays are typically a little a little more gross. Excuse me. Okay, so I got 13 minutes now. Where am I at? 9:15. All right, this is looking juicy. All right, so here we go. We've got this candle closed at 9:30. This is the 9:30 candle. I've got an hour and a half left in my session. I personally would be wanting to wait because the problem with entering with this fair value gap right here is that we are going to have to have like this candle is going to have to flip bearish in order for us to potentially go long. That being said, overall, it is in line with our higher time frame, but I'd prefer to actually enter somewhere in here off of like a 5-minute leg, which this looks like the whole thing is a 5-minute fib, so we might have to enter down here. It's just a little sketchier because you're trading against the open 4-hour candle, right? Bump, bump. All right, there we go. So now I'm going to be marking up this 15-minute fair value gap right here. And let's go like this and wait. Okay, let's go to the 5-minute and mark up the fib now. Okay, so I'm going to have to wait for this to at least hit the 50 level because there's nothing around 236 that is a 15-minute fair value gap. And I'm actually okay with that because the bottom of this 4-hour candle is right at the top of that 15-minute fair value gap. And, even if it flips a little bit bearish, I could see it flipping a little bit bearish and then flipping back bullish. That's probably the most likely trade in my mind. Where are we at here for time? So we're in our last hour of the session here. If we don't get a setup, look at that. Okay. If we tap the 705 right there, almost. I could probably adjust. Let me just adjust this to the high. Sometimes you have to be very specific about where you put your Fibonacci because that will actually determine if price actually does hit these levels. It's right there. Man, it's so close. I would say with spread and whatnot, that would count, but it's so close. Okay, well let's just here we go. So look at the context that we have here. We have this fair value gap, which we're currently in. We need to flip. We need this 1-minute fair value gap to actually flip, and we're at 10:14. So one more candle, and boom, new 15-minute candle. We did an internal sweep. There we go. Okay, there we go. Now we actually for sure swept it. Very good to see. Let me go to the 15-minute. So this 15-minute candle is actually invalid because we inversed it right here, but we're still within this first presented 15-minute 15-minute fair value gap down here. So even though we flipped bearish on this 4-hour candle, my bias is still bullish because the higher time frame. If I go out higher time frame, we're still bullish. Higher time frame is still very bullish. Yes, we've swept external, but where's the most logical place for price to go next? Internal. Where's internal? Right here, this 15-minute fair value gap that we're in. So I'm looking for price to come up and not only inverse this 1-minute gap, but I also want to see a change in the state, which will happen if we close above that right there. Okay, so this is cool. This isn't a fair value gap, but we got a change in the state right here. And there's no fair value gaps here. So again, I would I'd be a little bit more cautious with this. You got to keep an eye on things, but to be honest, I would actually take this trade just off of the CISD that was created right here. So if I go back one candle, that's the actual entry candle that I would go off of. and this may or may not play out. So we're below the actual 15-minute fair value gap that we're in. We're at the 705 level. I'm targeting the 236 because that's what dictates my targeting rules, just based off of what I've back tested. And then we're rejecting off the 705 and targeting a 236. Rejecting off the 50, we're targeting the 0. Rejecting off the 236, targeting the 27 extension. And we just want to be mindful of this for value gap, but I actually like this trade. So let's go ahead and set this up as an order. We're going to save and journal this before screenshot. Sure. I got good confidence in this. Let's go. This is what, Monday, July 8th. So this is a no news Monday. We're sitting at 1041. And yeah, let's go. 1 minute CISD. This is a 705 retest. And we're actually against the 4-hour candle. But again, higher time frame tells me that this is, even though we are against the currently open 4-hour candle, higher time frame is bullish. All right, let's minimize that. So we've entered this trade. Let's go ahead and see what happens here. Tapped into that 1 minute. Barely did. Oh, there we go. We inversed it there. Let me just hit play on this. Oh, okay. There we go. Beautiful. And that's why you don't necessarily need to wait for this fair value gap to get inversed, because if you get a 1 minute for me at least, if I get a 1 minute CISD or a 1 minute IFVG, those are my entry triggers. If I get those two in combination with each other, I have that much more conviction to enter the trade, especially if it's within the same 1 minute candle, right? So this, theoretically, this trade would have made me like $2,400. You go to here, do an after screenshot. Yeah, looks good. Looks really good. Quick save, 2.4K on a no news Monday. This is what I'm saying is I've got the data. I've got the data. I don't have to worry about all these people saying, "Oh, don't trade those news Mondays. Don't trade them." No, I don't care. I'm gonna trade them. You guys can, enjoy your 3-day weekend, I guess. Also, I'm trying to finish my coffee, but I realized as I was trading this, my cat was just had her head stuck in my coffee, which is a little disappointing because I really was enjoying this cup of coffee. So, all right, let's see here. So let's just go to the next day. This has been a long video. We're 33 minutes in already, and we've only backtested 2 trades. This typically is not how long it'll take for me to backtest, but I thought for the sake of, showing you guys how I backtest, some more examples of how I trade, would give you some idea as to how you can go and do some backtesting for yourself. Like I said, I have all of the backtested results with before and after screenshots linked below, like the sharing link to all of this data. You can access the trade data with those before and afters and the tags and all that fun stuff. And my notes. I take notes on every single trade, or at least like 90% of trades. So I want you to have the ability to review that information yourself and go ahead and backtest it if you want to backtest it yourself, right? So again, last couple candles, very bullish on the 4-hour. This is the one that is currently open. It's closing in 20 minutes. What's the news? Oh, look at that. Fed Chair Powell testifies. I don't trade on those days. So let's go to next day open. And Federal Chair Powell testifies on Wednesday, July 10th as well. Yeah, okay. Go to next day open. Look at 2 days off. Look at that. And then this is CPI. So this right here was CPI. That's what that big spike was. So I actually don't mind trading CPI days at all. But let's just go ahead and hit play. So we got 7:45. So this is the candle that's closing. 7 more minutes. 1, 2, 3, 4, 5, 6, 7. Boom. All right, so we're bearish here. We're currently open bearish here. What am I looking for? I'm looking to go short because there most likely is going to be a correction within the higher time frame to somewhere within this leg. So whether price decides to do, where's my little draw tool? See if I can get, okay, let's just use this. So like if price comes down and pulls back to, the 705 on the higher time frame fib, I can take advantage of that as long as my 4-hour candle is actually bearish because I can't predict when price is going to reverse if it's pulling back. But I can definitely take advantage of it pulling back and that being in line with my higher time frame candle. Okay, so now I have to wait for a 15-minute fair value gap. That's the first thing I need to wait for. Wow, this is very bearish. Goodness gracious. This is why, again, you can't predict how far price is going to pull back. Like trying to catch a reversal in here to continue going long, you're going to get smoked. Or you're going to have to wait a really long time for that to actually show up. It could be the next day. It could be next trading day. So this is the only gap that's currently valid to go short, but it's still not valid because this candle's open, right? So we got to wait 14 more minutes. All right. So let's go jump down to 5 minute. All right. So here's our 5-minute fib. Pretty obvious to me that we're going to have some sort of entry within this zone. Okay. Let's keep going here. I'm just going to go to the 15-minute and play. Goodness gracious, look at this direction on this higher time frame. Okay, so we're still at 9 o'clock here. Okay, so now we have a new 15-minute gap right here. And what am I looking for? I'm looking for the 5-minute fib, which is right here. 5-minute fib from there to there. You zoom in so you guys can see this a little bit better. Okay, so now I'm waiting for a pullback into this area. If we do break above this 50 level, I'm going to wait for a 705 tap. It's very straightforward. Let's go ahead and click where we have our time. We got an hour and 10 minutes left in our session, so just going to kind of play it. Let me go back to the, just pull this down. All right, there we go. So let's just keep going here. We'll get 15-minute. Yeah, there's nothing on the 15-minute. It's actually cleaner if you just look at 15-minute because then you're not worried about, certain things potentially not showing up for you. Okay. We have a new gap. Oh, it's it's outside of our trading window. So this is a no trade day, which is totally fine because, this is basically a falling knife. Or I would call it a falling knife. If you're trying to go long here, you're trying to catch a falling knife. If you're trying to go short, it's basically a runaway train, right? You don't want to be doing anything with either of those scenarios. So no trading day for me. Let's go to next day open. So what is that? That is July 12th. Oh, this is PPI. Okay. Friday, July 12th. So 6:30 and then 8 a.m. So when I have news at 8 a.m., I like to wait a couple minutes. Well, I have to, especially if I'm on the standard account with FTMO. I have to wait a couple minutes after that news event to consider going long or short. Just entering a trade in general, I have to wait. Okay, so let's just go ahead and zoom to 8 a.m. It's 8 a.m. So news has already happened. Well, yeah, news has already happened here. So let's go 4 more minutes. 1, 2, 3, 4. All right. So look at the higher. Where's the higher time frame? Can't. Where's my indicator? Okay, yeah. So we're bullish right now. This is the low. I'm just going to mark this out because I can't actually see. So as long as price is above there, this open candle is bullish. Now the only problem with that is our 15-minute fair value gap is actually below where price would be valid to go long. That being said, I know we're very bullish because we've taken out external sell side. We're now probably seeking some sort of internal buy side in here, right? So I'm okay going long, even if this candle does flip bearish because it's in line with a correction on the higher time frame. Let me go to the 15-minute time frame and just wait for this to pull back. Okay, let me go to the 5-minute and refine this a little bit because again, I love these Fibonacci's. Gives me exactly the levels I should be caring about. Let me just delete this line. All right. So, okay, so we rejected off of the 236. Let me look at the 1 minute here. We do have a 1 minute, tiny little 1 minute, which is an inverse fair value gap. Okay? And we're bullish. Look at that. The higher time frame is bullish. So I do like this. I'm going to enter off of this though and just have it set up as a just have it down here, and we're just going to target this 27 extension level. So that's what the trade is going to look like. I'm going to go order it, save and journal. So yeah, I set it up as a buy limit because I do anticipate like a couple of point pullback. I'm fine with that. That's where I would have entered anyways. 15-minute fair value gap. We do have news. It's a 1 minute IFVG. We do actually have a 1 minute CISD, but it was on the next candle, so I'm not going to add that here. This is a 236 retest, and we're targeting the 27 extension target, and it's in line with the 4-hour. I'm not going to. I'm trying to think what notes I could leave here. 31-point stop. That's in line with my average. 75-point target. I mean, everything is lining up with my typical trade setup parameters. So, yeah. I don't really have any notes on this. This looks good. Just gonna hit the next button. All right, so there it triggers us in. I mean, come on. Like, I've never back tested this before. This is the first time I'm back testing these setups, and I've won 3 for 3. Okay, I promise you I didn't cherry pick this stuff. This is crazy to me. This is why backtesting is so addicting, because when I'm winning like this and backtesting my plan, and then I go and apply that plan during the week and I see it work the exact same way as my backtesting results, it's like one feeds the other. You backtest, you're winning. You forward test, you're winning. So why am I backtesting on a Saturday? Because this is like dopamine for me. This is this is like happy feelings. I'm getting happy chemicals all day long doing this kind of stuff. So like absolutely insane. And let's see if it reverses. See, look at this. This is just very interesting to me. We enter off of this, it goes straight to our target. Then it begins to chop. That's not coincidence. That's from back testing a lot of data, a lot of friggin' data. Okay, over 119 examples now. This is, I think, the 120th example that I'm back testing. So this trade, where's my thing? Okay. This, I'm gonna take a after screenshot. I'm gonna put absolutely beautiful trade, almost no drawdown and straight to TP. Very textbook. A+ setup. Excuse me. So that would have made me 2.4K. Same, look at that, same as what I made on Monday. So I took 2 trades during this week. because Powell was speaking during these days, so I didn't trade those days. And look at that, I made almost $5,000 this week theoretically from backtesting. Previous week to basically, yeah, over 5,000 this week. So far I've traded 2 weeks in July and made $10,000 with no losses. Excuse me, I just had to go in a coughing fit there. So yeah, let's just keep on going here. I want to give a couple more examples. We got 15 minutes. See if I can squeeze in two more examples. Give you 5 back tested examples. And all right, so 15-minute. Let's see here. All right, Powell speaking. Let's skip this day. July 16th on a Tuesday. That is 4 retail sales at 6:30 a.m., which is this little spike. I'm totally fine with trading today. And I actually find that on days when there is news at what is 8:30 a.m. EST or 6:30 a.m. MST, those days tend to actually be better probability for me in terms of price action. Just from my just from using AI to analyze things. So, all right, where are we at here? We're at 7:30. Let's just go to. All right, yeah. 1, 2, 3, 4, 5. All right, so now we have the new 4-hour candle that just closed. So I'm looking at this, and this could be either way right now. Let's just look at the 15-minute time frame. We are actually within a 15-minute gap. See what else. We do have this gap right here to go short potentially. So there's two scenarios here. Either we have price pull back into this gap, or excuse me, pull back into this gap and then continue short, or we create some sort of a reversal pattern here to then go long. It just depends on what this 4-hour candle is going to do, because the open is sitting right in the middle of that 15-minute gap. So we have to be a little bit more hesitant with this, a little bit more patient. So let me go to the 5-minute and look at the fib and see if price decides to. Okay, so we totally disrespected this 15-minute. Actually, let me make sure that's the case. Okay, 9 more minutes till we totally disrespect that 15-minute gap. All right, so this gap has been inversed, is no longer valid. Now I'm waiting for price to potentially come back into here or create a new 15-minute gap that I'm trading. 2 minutes, boom. All right, so we got another gap, and this one I actually like a lot better because it would make sure that this 4-hour doesn't flip bullish. Let's look at the 5-minute. Mark up our fib from here to there. Look at that. 50 is sitting smack dab in the middle of that 15-minute gap. So let me just go candle by candle here. Okay. We get a tap. Okay, we're now in that 15-minute gap. All right, let me look at the 15-minute. I think the 15-minute just closed, which is interesting. All right, let's see. No inverse here. We do have a fair value gap sitting right there. Potential inverse. Let's see what this next candle does. There we go. We get our inverse fair value gap. And we actually get a change in the state simultaneously because this broke this low. So this is what I was talking about, is you'll get trade setups where within the same candle, we get a CISD and an IFVG in the same candle. So this is high conviction. And even with high conviction setups, the chances of you losing that trade is still a possibility. there's still a possibility that you'll lose this trade. Look at that. My average risk reward is 2.9, 2.91 risk reward. All right, let's go order this up, save and journal, click the before, go ahead and mark my tags, 15-minute for value gap. We have a clear draw, sell side draw. We have a 50% level retest. We have a in line with the 4-hour. We have a 1-minute CISD. I think that's it. And I'll put my confidence level as pretty high. Good stuff. Let's go ahead and minimize this. Now we're just going to let this play out one way or another. It's okay if it doesn't work out. It's just part of the plan. Part of the plan. There you go. So that did not play out. We got stopped out on that one. Let's go ahead and mark that as take the second screenshot there. And textbook A plus setup simply didn't play out. And if you have a trade that is a textbook A plus setup that doesn't work, it doesn't mean that you were wrong. It just is part of the probabilities. Even if I had my stop loss up here, I still would have been stopped out. There's nothing that you can't see every single thing working for you. Okay, so this is interesting. So we're still within my trading window, and I do allow myself the opportunity for one re-entry. Okay. That being said, we just flipped this 4-hour bullish, but let's just wait and see if we get some kind of, so like the last two, like this big rejection wick right here, anything within this area is actually optimal to go short because we're tapping just above the open of that 4-hour candle. So we're tapping within this big rejection wick on that 4-hour time frame. At the same time, let me look at the 1 minute. So we tapped that 705 level. We tapped into a first presented 15-minute for value gap. What do I need to see? I need to see this 1 minute gap get inversed. Almost, there we go. There's our inverse. So because of my stop loss placement in this scenario, if I go inverse for value gap, because of where my stop loss would have to be, I think it's actually gonna be, yeah, it's outside of my, let's go 705, targeting that 236, see what that is. It's not the worst, but honestly, I'm gonna place my entry right here to get that 1-to-2 risk reward ratio because I do anticipate a bit of a pullback. And let me go ahead and click order. It's going to be a market. It's going to be a sell limit. Save and journal. Let's do before screenshot. 15 minutes. This is giving me the 1 minute IFBG. Again, let's go. I would call this V-shaped recovery for sure. This is a re-entry. And 705 retest. And in line with 4-hour. Again, full confidence on this. Textbook re-entry. Let me just go ahead and let this now. All right, so we get our tap of our entry. Can I get there or what? You gonna play with me? Play with my emotions? There we go. And that's why I have no trade management rules. I don't care if we come this close to our take profit and we don't hit it. Especially on a re-entry trade like this, I'm walking away from the charts anyways. I don't care if this trade plays out the next day. I am not managing my trade. I'm not sitting here and micromanaging risk. But look at the textbook retest of that IFVG before dumping. And then we come back, and I think we actually retested the CISD, which took place after. Yeah, look at that. We dumped, almost got to TP. We didn't quite take out this low, but we did take out, this 1 minute bullish order block, tapped into that 1 minute bullish order block, came back up, tap CISD, and then it dumped, right? And let's see how far this goes. Tap the 0 level. See the taps 27 extension. No. So that's why I like to do these. I like to do these optimal. Um, what are the most logical places price is most likely to go? Well, for this specific setup, 236 level, projecting off the 705, right? And yeah, you can set a sell limit. Oh, that was the thing I needed to do is you need to go here and actually do a screenshot of that and mark this as having a limit order. Boom. All right, so we turned a unprofitable day into a profitable day, right? We lost. Um, why can't I see? Well, I know it was 1%, so I know that we lost 1,000 here, and then we turned around and made it would have been $2,100 with a 2.1 risk reward. So that's very cool stuff. Very cool stuff. And we're within that. Yeah, we're within our trading window. Let's remove all these drawings. And let's do one more example to make it an even 5 examples today. Go to the next day open. Also, let me know if you can hear my focus music. I did have it turned on where it could pick up the audio, but yeah, I didn't want to be super disruptive, but I also want some background noise because there are periods of time where I'm sitting here thinking and awkward silence. I guess I don't know. I'm messing around with some background stuff, so if you guys like what you hear, just let me know. All right, so here we are at market open, 7:30 on Wednesday, July 17th. This is a no news Wednesday. I think Wednesdays are actually my worst days, probably probability speaking. But let me go ahead and just zoom on over to the. There we go. Let me just back up. So yeah, okay, there we go. There's our new 4-hour candle. What do we got that's in line with this? Well, we got this fair value gap sitting right there. That's the closest one. I don't really have any price to go off up to the left of us, but I'm just going to be looking for shorts anyways. All right, there's a new 15-minute candle. Okay, so here's a new fair value gap. Here's a new 15-minute fair value gap. Let's look at the 5-minute. Let's throw up our fib. Oops, fib from there to there. Beautiful. Let's go back to 15-minute and just click, click, click until. So we haven't tapped that 50 level. There, I think we've tapped 50 level. All right, so we have consequent encroachment, this 15-minute right there, a dotted line, midway point. And okay, so this is interesting because we're so close to tapping that 50 level, but we're like a point or a tick away. I also don't like that we yeah, I just don't like that we're not quite tapping it. This is again, let me just double check. I'm right on the edge with my fib. This is why it's so important. It's like yeah. So, let's see. Let's go back 3-minute. Yeah. I mean, some people would argue that you put their fib here, but I'm looking at 5-minute. And the 5-minute high is there. So I'm going to be patient. I'm going to see if this comes back higher and pushes deeper into retracement for us. I'm going to be picky. I want to be picky with my setups. Okay, there we go. That's why I wanted to be picky, because if I had entered, I would have been stopped out. Let's see. Okay, so here we go. We get a CISD right here. There's our CISD. And we actually already inversed this fair value gap, but I have higher probabilities with CISDs anyways. Um, I'm gonna put my TP there, and then we're rejecting off at 50, so we're actually targeting this level. Not optimal R. Actually, technically speaking, it should be there, and that's like a 1-to-1. Yeah, not an optimal restore trade. I'm going to wait and see if I get something better. So let's put a 15-minute and see if we get, 5 minutes. Let's just pull this down a little bit. See if we get any more pullback here. I do think it's possible for us to see a 2-minute gap. Yeah, no gaps there. I mean, yes, I would have won this trade, but that's like a 1-to-1. Even with my stop loss, like right above here, would have been like a 1 to 1.2 or 5 or whatever it was. So yeah, I wouldn't have taken. I just didn't like how that trade looked. Okay, so doesn't mean there's no more opportunities. There's no gap there. Looks like there's no gap there. And that's it. That's it for our trading window. So, you could look at this and you could say, well, why wouldn't you enter there? We continued short all the way to the 27 extension. I'm not looking at best case scenario. I'm looking at most likely probable best case or most likely case scenario, right? Highest probability case scenario. Even though we got a CISD here, like even if I set a sell limit, I wouldn't have been tapped, right? You could have argued that, well, that's actually the sell limit, or that's actually the CISD, but again, it didn't tap it, so it's totally fine. Like at some point down the road, I might come back to this and say, all right, well, what's the likelihood of us targeting the next level? Like if we're rejecting off the 50 and I'm targeting the 0 level, well, what happens if I target the 27 extension instead? What does that do to my win rate? What does that do my bottom my overall realized P&L? Well, I don't know because I don't have the data, so I'm not going to trade that way while I'm backtesting. I have to follow my rules very strictly. So, I mean, not taking a trade is taking a trade. But I'm gonna keep going here. July 18th tomorrow. Let's do one more of these. So I want to get 5. Okay, so we're at 7:30 here. 1, 2, 3, 4, 5, 6, 7. All right, so this is weird. Look at the 4-hour. We've got big rejection wick looking 4-hour candle. This candle also closed below this previous bearish candle. I think overall I'm definitely bearish. So let's just mark up this 15-minute gap. Throw a 5-minute fib on this and see what we get. And all right, let's go down to 15-minute again. All right, so we actually just tapped the 705. Still, oops, oh, that was weird. I am still bearish on this. So let's just see what happens here. Okay, so there we go. We get a CISD. Let me see. I don't see fair value gaps being inversed. Again, this is not a very good, the highest quality of trade, but honestly, I'm gonna go for it. Go ahead and do a market execution here, and we're targeting the 236 level, 1 to 1.42. I'm gonna move my entry to where I'm at a 1 to 2 risk reward because I do see it pulling back and potentially retesting that 705 before continuing. So we're just going to be a little bit more optimal with our risk reward here. Let's go ahead and order. We're going to save and journal. Do a before screenshot. So we got a 15-minute fair value gap. We've got July 18th is we had news already. So 1 minute CISD, 705 retest, and so the limit order. It's actually against the 4-hour candle, but it's in line with the other 4-hour candles, which is fine. So even though we are against the open 4-hour candle, the entire time frame is bearish. Just make that note. See if we get a pull up here. All right, we barely tapped my entry. And let's see what happens. Wow, tap my entry again. Like, oh my gosh, dude. This is crazy. Absolutely crazy. Like, I'm still amazed by how the trades play out. Mine with my analysis. Um, even after, like, let's say for whatever reason, the spread didn't trigger. It came back and triggered, and then minutes later hit my take profit. I can't make this up. I mean, backtest this for yourselves. Go ahead and backtest it for yourself. I'm 5 on this video. It was an hour, over an hour. We made this long. You've got a better, um, you have a much better attention span than the majority of people. So really appreciate you for staying. I appreciate everybody for staying this long if you made it this far. But yeah, I'm going to call it there. Let me just look at my little journaling tool and do it after. And you can, of course, come into the link that I'll have in the description and verify that this is, in fact, the exact trades that I backtested. I don't know if there's any other tags I need to mention here. Okay. Look at this. We had one losing trade, which the re-entry made us net positive right here, which was that Tuesday. But I believe I backtested this one, this one. Actually, let's just double check. 1, 2, 3, 4, 5, 6 trades overall, but 5 trading days overall. So yeah, again, usually it doesn't take me this long to backtest, but I'm talking myself through explaining it to you guys that are watching, and appreciate you for sticking around. And if you like this video, you want to see more backtesting of me, well, I will definitely do more backtesting videos. I'm also going to do more live trading recaps, and I do want to make some more videos that are more educational in nature. But there's a lot of information online that explain these different confluences and these different aspects to the strategy that I'm already explaining. So yeah, appreciate you guys for sticking around, and I'll see you in the next one.